Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund. Thank you for joining me. Hope you guys had a wonderful weekend. We have a lot to discuss, a lot to go over. So as always, let me start by reminding everybody this is a virtual hedge fund. You're a portfolio manager on the hedge fund desk. And what I request is that you put your head in the mind frame of executing a strategy that's yours. I'm going to share with you my strategy. I'm going to share with you our flagship fund of how I use my strategy to manage capital for others. The job for you now, grab a pen, piece of paper, get yourself ready. The job for you is to figure out your risk tolerance and what you're trying to do with your portfolio, and then execute that strategy. Okay? A lot of changes over the weekend. Took me a while to get this live stream started. Those of you, quick programming note, who are Armor Insiders and are going to the website trying to figure out, all of our allocations, website's down this morning. Okay, so things are being worked on, working on the back end. So I'm going to share with you right now, step by step, what the flagship fund looks like, what our allocation is percentage-wise, what stocks we own, what stocks are on the top of the whiteboard that we may add this week. Okay, so you're going to get all that information. And then at some point today, I imagine the website will be up and running correctly. We've been streamlining the website, making it simpler for everybody. You can just hop right on it, get our captain's notes for the morning meeting, our risk monitor, which is now green. We're going to talk about that. Our portfolio, what it looks like, and what our whiteboard looks like, stocks that we may be buying. So we've kind of really slimmed it down, make it easy. All right. Let's start with the most important piece of information for this morning. By the way, Armor Report subscribers, guys that are watching this right now, you can share questions in the comment section of this video. I'm happy to get to it. We're going to go live all day from now straight to the close. Okay? So you feel free to join us all day. You're not going to be in the Slack room. That's for Armor Insiders, but feel free to throw a question in the comment section during the day. I'm happy to answer. Okay? Step one for us, everything flows from our risk monitor. Our risk monitor, just to remind you, is designed to uncover flows of institutional capital. Institutions make markets. Okay? Institutions make markets. Our job is to figure out when institutions are putting large amounts of capital to work and to be on that, in front of that, as fast as we can. 7 out of 10 stocks follow the market. 8 out of 10 follow their group. So everything starts there, because our job on this desk is to get on the right side of probabilities when reward is worth risk and shut out all the other noise. Okay? And let me tell you something, there's a lot of noise right now. Got to shut it out and execute the strategy to get on the right side of probabilities when reward's worth risk, and accept that risk to the stop. Sometimes we're going to lose money. We know that. We know that. So you commit capital, you know what the risk is to the stop, then you do your best to walk away and not mess up the situation. Just let it play out. If stops are hit, we raise cash. If not, we make a lot of money. Rinse and repeat. We've been risk off since February 21st, which was pretty much the top of the market. Risk monitor went red. Risk monitor green on Friday at the close. Roll that back 2 days. On Wednesday, our most aggressive algo, just to trade the S&P, gave us trade number 21. You and I have been trading that strategy since 2022. Strategy's up over 125%, not including the yield we collect when we're sitting in cash. That's just trading gains, average holding period 10 days. This is trade number 21. And that trade has already raised its stop to break even. Worst case scenario, trade 21's break even trade. But more important, that piece of information, when we put a position on and it immediately pops like it did, and the stop goes up quickly, that increases the probability more money is going to be made over the next couple of weeks. So let me walk you through what's happening right now, okay? Here you're looking at 4 charts, the 4 horsemen. I don't know if that's apocalyptic. I guess it is. These are the 4 horsemen. This is the S&P on the top left, NASDAQ 100 right, small cap index and momentum. I wanted to show you small cap and momentum because they couldn't be further from the opposite sides of the spectrum, okay? So always these two horses lead the risk monitor, right? Our S&P algos first to the table, risk on green on Wednesday, closes the week at the high. NASDAQ 100 joins on Thursday, closes the week at the high. Small caps join on Friday, a little bit below the high, but please look at the momentum index. The momentum index is outperforming every other index as it not only breaks out above the highs, but look, it's trading above every major moving average. Exponential and standard 200-day, 50-day, 25-day, everything. That generally won't happen in a bear market bounce. You generally won't get momentum that strong in a bear market bounce. Let me be clear here. I could spend the next couple hours going over all the negatives that are in the market that we all already know. I'm going to highlight for you some of the interesting positive things that I believe only significant institutional money coming into the market could possibly do. Momentum is one thing. All 4 of these indexes is another thing. In fact, we have 10 indexes in the risk monitor. 9 of them are going like this. Only U.S. Treasury bonds are still red on our algo. Only U.S. bonds are red. But to counterbalance that, Bitcoin, we loaded up Bitcoin a couple weeks ago. Double bottom at the 200-day moving average and blew out last week. So the king of risk on has always been Bitcoin. It blew out 2 weeks ago. Momentum's leading. I know all the bad news. I know. Another Trump tweet could kill it all. I know. I can't run money worrying about tweets. What the market's showing us is that institutional money is coming back in. And let me tell you why that's important. Institutions don't put money to work like you and me. They don't say, hey, this looks good. Let's put our capital to work. And they do it in a day. Institutions take months to put capital to work. So when they make a game-changing decision, it generally doesn't flip the other way unless there's some amazingly awful piece of news that turns off that algo for them. Okay? They're the elephants on the Serengeti plain. And they're making their way towards the watering hole. We're the cheetahs. We're ripping there as fast as we can to get ahead of them. When they start trundling along, it's very hard to turn that around. They don't want to turn it around. They obviously see something that you and I don't yet, right? Because institutions pay for information that you and I don't get. Let me say that again. Institutions pay for inside information, and you and I don't get it. That's just a fact. The only way to mitigate that is to use algos like this to see where they're headed and understand when they start heading that way, they generally keep doing it for a while. And we read last week, as an example of what I'm talking about, we read last week that the Trump administration is talking to Wall Street and telling Wall Street what they're doing. Seems a little unfair. Closed door meetings, Trump's sitting down with Wall Street, but we see what's the result of those meetings. First of all, liquidity is going like this. So behind the scenes, liquidity is being added to the system. I don't care what the Fed says they will or won't do with interest rates. Liquidity measures are going up to support the market. Let's go over some of these statistics as we look at these four indexes. Okay? Liquidity is going up. Let me tell you something else that's wildly important to me. It's credit spreads. Okay? Credit spreads are returning back towards risk on appetite. Guys, that's wildly important. If there's major issues with the system, credit spreads blow out. They did during the long-term capital collapse in 1998. That was an Asian crisis. That was an Asian crisis like we have now, supposedly, right? They certainly did in 2008. Credit spreads are like the canary in the coal mine. And they're singing right now, coming back down to normal. I know the headlines you're reading. End of the world. I get it. I get it. But credit spreads are coming down. Liquidity's going up. What puts stocks up? Stocks go up when liquidity goes up. You know, I had a friend on X over the weekend where I shared some of this information, and he responded on X. He responded to me and said, "I'm scared." And my response back to him is then this entry point has to be right. Because I don't know about you, but every time I put capital to work when I'm scared, I make money. And when I sell because I'm all excited, I make money. But when I buy when I'm excited and sell when I'm scared, I lose money. I mean, that's what happens to me. I don't know about you, but that's what happens to me. Right? So credit spreads tightening, liquidity increasing. Let's look at a couple other pieces of information. As you stare at that chart, let me read this to you. This is pretty interesting here. Okay. I don't generally quote for you other indicators. Okay. I don't generally go across and talk about other indicators and all these types of things. But there's one indicator that I find very fascinating. You know why? Because it's 100% accurate. And it was created by Marty Zweig. And Marty Zweig was the original creator of the term "don't fight the Fed," which goes back to liquidity. When liquidity is increasing, stocks go up. So maybe some of you read this over the weekend, but the Marty Zweig breadth thrust indicator triggered on the 24th. Happens to be the same day the risk monitor went green. It's just the 20th time since 1945. And it's produced gains 100% of the time over the next year. The average gains around 23%. Only 20 times since 1945, 100% accurate. From here going forward, over a 12-month period, the S&P is usually up around 23%. The last time the Zweig breadth thrust indicator triggered like this was off the low in November 2023. Now, you guys who've been with me for a while might remember that date. Let's go back and look at the S&P index that we trade, SPXL. That's right here. November 2023, risk monitor went green for us. That was trade number 9. It caught the bottom of the market. The market skyrocketed off of that. Okay. The reason that's important is it's an indicator of institutional pivot. It's an institutional pivot. And that's what we're looking for when we're trying to put money to work. A couple other thoughts for you. The option structure has pivoted back to something more bullish. Options have been pressing the market lower, lower, lower. And that flipped to positive last week, or at the very least, neutral. Let me give you this statistic. It might blow your hair back. After being down 13% at one point, the S&P is down just 1.5% in April. If it turns positive, if it's strong the next couple of days and closes the month in a positive, up for the month, it's going to be the biggest monthly reversal ever. Think about that. If we close positive, markets were down Sunday night about 0.5%. Looks like they're going to open up about 0.25%. Wednesday is the last day of the month. If we close positive for the month, it will be the biggest reversal in history. And the last reversal of close to this degree, this is going to blow your mind. Do you know the last reversal down big, up by the end of the month that's close to this degree? March 2009. So I know all the bad news out there, but institutions are doing something different. And that's why we're committing capital. So let's go talk about what our portfolio looks like right now. Okay. I have an opinion. My opinion, when I run my personal capital and I get a risk monitor green, is to get all of my capital to work as close to the stop as possible, because I know the first 5 days of risk monitor green are the most dangerous. Everything I've said to you so far this morning goes by the wayside if this week the market reverses and craters. I'm going to have to rip out every position I added last week. So to me, I want to get my position on last week. And now I just manage risk. You're going to be with me all day on the trading desk. Let me tell you what I'll be doing. I'm not looking to buy new things. Although I'm going to share with you one stock I might add today. One stock I might have to add today. I'm going to share that in a minute. But most of the work I'll be doing on the desk is hedging and trying to avoid screwing up what I've done, right? I put on positions, now just walk away, let it play out. I'm accepting the risk to the stop, right? If there's some positions I want to hedge intraday, I might do that. If something obvious comes about, you don't want to overhedge, you just chew up a portfolio. But if something obvious shows up, I might hedge some risk. But for me, this is what I've done personally and then professionally, and we did it last week. So now we're just along for the ride. We're going to see what kind of money we're going to make off of this signal, okay? First thing we did was we put on an S&P position. You can use SPXL, triple. You can use SSO, double. Okay, I don't use SPY at this stage because I need the cash. So when I use leveraged ETFs, it's to give me more room to do other things in the portfolio. Okay, so I'm not using leverage necessarily, to have 200-300% risk in a portfolio. I'm using it to help me manage exposure. So I'm using SSO. I've got about 30% exposure to the S&P in the flagship fund. I'm giving you flagship fund averages. So some of my portfolios I'm managing have 50% exposure to the S&P. Some have 30%. Okay, but 30% is the average, kind of the goal. All right. Then we've added momentum, which is leading the market. So we've got a momentum position in the portfolio, roughly about 10% of the portfolio. And we added shares of ARK. Now, I know you guys are going to think that's crazy because you've heard me talk about Cathie Wood and kind of laugh about her and joke about her. But really, at the end of the day, she generally puts together reasonable growth portfolios, innovative growth portfolios. The fact that she's crushed people over the last X amount of years, you know, innovative growth's been a hard place to be the last X amount of years. So, you know, forget about Cathie for a minute. If you look at the top 10 names that she has in ARK right now, they're the names I want to own. Led by Tesla. I own Tesla personally, but in the flagship fund, I don't want individual stock risk right now. The market's crazy. I recognize that. I see something special unfolding. I want risk, but I don't want individual risk right now. If I have to reverse this, if this week fails, and I have to get out, I just want index exposure. And I'm only managing 4 positions versus building out a portfolio of 10 or 15 stocks and then having to rip them all out of the portfolio as the market's collapsing, right? So it becomes very easy for me to hedge this portfolio. That's number one. So if things start to look ugly to me, I'm going to put shorts out on indexes, which will cover me on these indexes. If they rip higher, I'm not greedy here. I'm going to make some good money in these ETFs. So in the flagship fund, I'm more conservative than I am in my personal account. I'm going to tell you what I own personally. Okay, the market's about to open, so we can keep chatting about this because I'm not trading the first 15 minutes. So I'll go over what I own personally. But for the flagship fund, the capital I'm managing, it's these 4 indexes: S&P, ARK, Momentum, and exposure to cybersecurity stocks through Bug. Okay. I really like cybersecurity stocks. All right. Market's just opened. We're still chatting here. I'm not touching the portfolio probably for the first half hour. I'll look for carry trades. Oh, this is something I forgot to tell you. The carry trading portfolio had a big week last week. It was tough for a couple weeks during the risk monitor red market. But classic playbook plays unfolded last week. And we were knocking off 1.5% gains for the whole portfolio. It was beautiful. That only happens in a bull market. That happens in a market where volatility compresses and we go back to the normal bell curve of trading expectations. And so our playbook starts to pay. It's another piece to the puzzle. I think the market's going up, right? So, and by the way, just in case the market like falls out of bed here in early Monday morning, I want you to know right now, I hope it does. I like Monday morning weakness. I don't like Monday morning strength. Monday morning flat, that works for me. But if it were to sell off down to test a certain location, fine with me, and it holds that location, reverses, that'll be our carry trade. We'll be putting capital to work there, okay? So flagship fund, back to the flagship fund. Got about 40% of our exposure in those indexes. We still have our precious metals exposure. We're not changing that. About 20% of our portfolios in precious metals. We haven't changed that. Okay. Some of our favorite names like Newmont and Franco-Nevada. I mean, you can see we're up big on these names. Royal Gold. Got some silver in the portfolio. Silver is just confounding to me. I don't know if silver stocks go up with the market. They certainly don't go up with gold. So I'm wondering if they're going to go up as the market recovers. Okay, Wheaton. So those are our names, 20% there. We've got Bitcoin in there. So we got ARK, Bitcoin, and we have Coinbase, right? We had that early. We picked off Coinbase early. Perfect double bottom, right in that situation. Okay. So that's the portfolio right now for ARMR flagship fund and most of the capital that I'm running. We have by the way, we have exposure to AMLP and AT&T right now. So what am I going to do with the rest of the flagship fund? I've got about 22.5% cash in most portfolios. up to maybe like 30% cash. I really want to use that cash as a balance to my growth side of the portfolio with my turnarounds and dividend additions. I ripped them all out when the market was getting ugly. I'd like to add back some of my higher dividend positions and turnarounds. So here's the highlighted stock of the day that I might even add today. I think Boeing's got to be bought if it doesn't run away from me. It's up 3% this morning. Boeing's finally breaking a major downtrend. That's a Fibonacci fan sequence. So it's breaking the third Fibonacci fan on the upside. All the bad news is in. I mean, all the bad news. Because how much more bad news can it take? And the stock's making a bottom and breaking out above key resistance. That stock probably has to be bought, and I'm going to own that in the portfolio. And then I've got ideas I want to hop back in, like I want my Altria back, British Tobacco I'd like to own again. I wanted to get Philip Morris. It just keeps running away. So that'll be run away, but I'll get the other tobacco stocks. And Verizon's down, on T-Mobile earnings. We sold it up here. I'd love to pick off Verizon back down on the 200-day moving average if it can hold. So those are some of the stocks I might add. Here are stocks that are in my portfolio right now. I've got Coinbase for everybody, the flagship fund. And for my own capital in Armor Innovative Growth, I like to invest in power play names. I call them Armor Power Plays. Armor Power Play Investor, okay? These are names that I think dominate their space. So I've got CrowdStrike in the portfolio, Doximity in the portfolio. We have some Palantir. Did all this last week. Roblox, Uber, and am I missing anything? No, and Tesla. Okay, so those are my individual stocks that I own personally. And you may see me add some of those names to the flagship fund by the end of the week if I get opportunities. If there's some weakness during the week that brings some of my favorite names down to a key location and I'm running a more aggressive portfolio. So the flagship fund's like a model portfolio. If I'm running a more aggressive portfolio, the 25 to 30% cash I have, boom, 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 I might put into some of my favorite power play names if they come down during the week. My more conservative portfolios, you're going to see me move capital into my dividend stocks, okay? That's a wrap on the morning meeting. Let me see if you got any questions. I see Omar, I'm glad I can help. Thanks for that response. Yeah, institutional money has been moving into Europe for sure. That's been happening for a while now. I agree with you on that. We haven't chatted about the news cycle, but what would make the market? Why would the market go up a lot in here? It is possible that this is a man-made problem, and so if it's going to get resolved faster than the fear is on the street, the market's going up. I mean, that could be what the market's telling us. I mean, that could be what Trump is telling Wall Street behind closed doors. And that's why institutions are putting money to work. All the bad news theoretically might be in already. And the market's overreacted on the downside to how bad things are. I know, I read X too. I got an X feed with all kinds of information, right? I could have shared with you what's going on at the docks in New York City and Chicago, and LA, and there's not going to be anything on the shelf, and shipping's down dramatically, and in a couple of weeks it'll be like COVID and nothing will be on the shelf. I mean, I read all the same stuff you read. That feels like fear mongering that's priced in a bottom, and institutions know something else, right? Everybody knows that about shipping. Everybody sees it, right? That's why, okay, market crater. So if capital is being put to work this week and it's a follow through from last week, right? If it's not a follow through from last week, then the market's going lower, and those issues at the port become a problem. I get it. That means our stops get hit and we go back to cash. So we know how to handle that. It'll be disappointing. We'll go back to cash, market will crater. We'll wait for the next opportunity. But if it goes up from here, what's happening? You know, everybody sees all that. And behind closed doors, Trump's talking to Wall Street, telling him this is what we're doing. And Wall Street's saying, okay, let's start buying the market. Credit spreads coming down, liquidity going up. That's what's happening. You know, so when we read headlines, you have to recognize that institutions have already digested all of that. That's not something new. It's not like I see guys on X post that doomsday stuff as if it's something only they know. I mean, institutions monitor shipping containers closer than you or I ever will. They pay services. Look, I ran a hedge fund. I know. I could pay a service hundreds of thousands of dollars a year to patch me into satellite data on anything I request. This is a fact. I'll give you an example. Money gets made in retail stocks this way. You can pay a satellite service if you're an institution. I mean, an individual could too, but who has hundreds of thousands of millions of dollars? Who's got millions of dollars to spend on this type of research? But you can. That's why it's not inside information, because anybody can do it. It's just, you know, we don't have hundreds of thousands of dollars to spend a month. That's what it was, a few $100,000 a month for a service where I could query anything I wanted. So let's say I wanted to query, there was a certain restaurant that I liked a lot. And I thought stock would go up a lot. I think it's a great trend. Maybe it's Sweet Green or Kava or whatever. And I could say, okay, I want to know all of satellite imagery of all of their stores and how many cars are going through drive-through every day. And I want you to tell me if that trend is going up or going down. And I'm going to get that information before anybody else, or anybody else who's paying for the service. So if I see, 5 times the number of cars going through drive-through, they're probably going to have a big quarter. Do you see what I'm saying? And so institutions put money to work because they got that information. This just, don't hate the player, hate the game. I mean, that's just the way it is. There's been inside information since the buttonwood tree. That's just the way the market is. So if you can't pay to access that information, then we have to come up with other ways to understand the flows of capital and then not question it, just execute. That's the hardest part for us. We got to just execute, and you feel like you're doing it a little bit blind because you're not looking at the satellite data telling you what's going on. Options data is getting a lot better for us too. A lot better. Starting to get flipped more bullish again instead of so bearish. Hey, Aras, nice to see you, man. I got so much risk on right now. I don't see myself putting on a carry trade first thing in the morning. I'm only buying weakness today when it comes to the carry portfolio. Monday morning, I'm only buying weakness. If the market rallies up from here, I'm looking to put on hedges. Richard's sharing some ideas he's putting on. Let's take a look. SCHD. Oh, dividend. Oh, yeah. Look at that. Let's see what the dividend is. That could be a good idea for my dividend portfolio. 4%. 4% is just not going to do it for me. I need more than 4%, Richard, but I appreciate you sharing that. Otherwise, I'm just going to collect 4.3% in Treasury bills if I'm carrying cash. What's this? Vanguard high yield. 3%. Okay. I mean, you're expecting that the indexes to go higher and get paid a dividend while you're doing it, right? Era's got the gorilla there, so he must be talking about CPJ. That looks like just a beautiful, almost, I'd have to say he's our energy analyst on the desk, both traditional energy and uranium. And that looks absolutely 100% like a double bottom. At the very least, Aries, you'd have to argue, and we could easily argue, I don't know if argue is the right word, we could easily agree that the reward to risk from here in Cameco is a no-brainer. Takes out 40, you're probably out. Goes up from here, you've got a perfect entry point and a double bottom on a weekly chart. You will, of course, have to watch what happens when it gets to 50, right? Because you could see that shoulder, head, and if it rolls over at 50, you got a bigger problem. Just to be clear, for me, Eris, I know we trade differently, but for me, I'm looking to put money to work in relative strengths above 80. So relative strength of 28 just doesn't work for me. But I will buy a bottom. Let's take a look at Boeing. Boeing's got an 80 relative strength coming off of that bottom. So there's a double bottom in a weekly chart with an 80 relative strength. That I'll buy. I want to stay focused on where institutions are putting money. Disney's another one. 30 relative strength. The thing looks god awful. Just awful. So I'm all for bottom fishing, but when it comes to my type of bottom fishing, I'm looking for a Boeing chart where, yeah, it's got a bottom, but over the last, 3, 4, 5 months, it's actually seen its relative strength start to creep higher. And that tells you institutions are supporting the stock. That's why I'm looking at Boeing as a turnaround play. Oh, I know you do. I know. I mean, I appreciate you sharing the information, Aries, because some guys are going to want to buy that. Fitz, when I give you guys a look at it, I'm not. Let me be clear to anybody watching here. We have different analysts on the desk. Armor insiders share information in our Slack room that makes us all better. You guys bring fantastic ideas to the table. And so I want to see them all. And then some of them, I'm going to say to you, wow, that's something I might do with you. And others, I'm going to say, hey, that's a different strategy. So go do that strategy if you're executing what makes you comfortable. And I'm just sharing with you maybe why I'm not going to jump on that trade. That's all. But, everybody execute what works for them. And please keep bringing the information to the table, guys, because it's what makes us all better. One analyst can't cover everything. I feel like I'm going to miss ARLP. See, Alliance I'd like to own as a dividend. There's your 10% yield. Even if some of that's return of capital, maybe it's an 8% yield. Still, I really want to get on the coal stock. I don't know if I can call Ramco Resources a coal stock, but there's a 5.5% yield. It is a coal stock. They got the rare earth kicker. I feel like that should be in the dividend portfolio as well. All right, right now the market's kind of running away this morning, and we'll take it. There's the 4 white bars is a very strong signal at the start of the day, but honestly, those 4 white bars, I usually look at them more Here, you can see they worked on Friday. Look, the trade Friday was right up my alley. Market opened, pulled back, made a double bottom at the right below the opening range low, actually the first Fibonacci down, and then the 4 white bars, bang, 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 and the market was up the rest of the day, right? And we got that trade. We made a lot of money on that trade. The four white bars starting right here, I'm not going to take that. If I was not, extremely long already, if I wasn't wildly bullish and extremely long already, I probably would take that. If I was underinvested, I'd put money to work right now. But I'm only buying weakness on Monday. If this runs away on the upside, that would be such a gift to our portfolio that, I'm just going to sit back, relax, and enjoy that show. I personally don't think that's going to happen. I think that the market is going to come down here and test the VWAP. You're looking at a 3-minute bar chart. Every bar is 3 minutes. All the lines on the chart are the Armor Price Movement Profile, or the PMP, I call it. So it's an algo with Armor VWAP as the engine in the algo, standard deviations above and below it, 1 through 3. We have our opening 15-minute range, and then we draw our Fibonacci extensions 1 through 4 above and below. The black lines are just 1, 1.5, and 2% above and below the opening range, high or low. There's the big down bar. That's why I'm not putting money to work right now. We use the 1-minute chart to help us execute, 3-minute chart for our triggers, and the 1-minute chart to refine it a bit. And of course, the average true range, high and low. The ATR is a real moneymaker for us. And look at it, it's up there again. It's just wild. Generally, the ATR is down here somewhere around the 3rd or 4th Fibonacci up on the day. That's a normal market. And instead, it's way up here, which, theoretically is incredibly bullish. It means there's no real limit to the upside today if it starts to run. Those of you trading with me for a while might remember our ATR trigger in a bull market. The ATR low of the day, normally the average true range is just a horizontal line. So I call it the Armor ATR because we put our own spin on it. We take the basic calculation and we put volatility into it, top day and multi-day. So it starts to move the average true range up and down. So what you're seeing here is the average true range low has already started creeping higher. If the ATR high stays kind of flat up there and the low starts to creep higher, it generally means there's money coming in, pushing the market up. Something I wanted to say that I forgot to say about our discussion about the whole Zweig thrust and all of these bullish things. It's actually true in a short window. The Zweig thrust usually meant the market went higher, but in the short term, it went higher in the short term. But it's really a big picture opinion, right? It's like 100% of the time, the market was up 12 months later, on average 23%. There's a lot of crazy swings on the way to that. So doesn't mean the market can't sell off in here. It's possible. What's the worst case scenario? We're going to get tripped out of all these positions we bought last week, some of which will be break even because stops have been raised. So we have to go to cash. It makes a double bottom and tries again, and we have to get on it again. And the thrust indicator will still be accurate, right? Because you got 12 months for the market to go up. So, that indicator doesn't, it's not a guarantee the market's going to skyrocket right now. We're in a very strange market. We got headline risk. So we just got to take it one day at a time. And this is why I put on really all of my risk last week, close to the stop, because I don't want to pay up for the market here. At the same time, I'm not hedging or shorting unless I see something very obvious that sets up that forces me to hedge. You know, like something like, here's an example. This black line I have in here. So we're, again, looking at 3-minute charts. This is the S&P, the NASDAQ, small caps. And don't forget, we used Donald Trump, DJT, the Donald Trump media. Okay. We use this stock as a lead indicator on the market. Sometimes it leads the market for us. It's really kind of compelling. As an example, I'll go over it with you. On Friday, DJT broke down with a fairly large down bar right here, back below the VWAP at 124. The market at 124 was still screaming higher. The market didn't reverse with a big down bar until 139. So we're looking for that kind of divergence. If they're trading together, that doesn't help us. But if you see the market sell off aggressively, and for instance, Trump media all of a sudden starts to go up, well, then we're looking for a buy. We're looking for a buy opportunity. We're looking to buy something. And my theory here is that Trump insiders know when the next tweet is coming out, and they go and trade the stock. That's my opinion. I don't know if that's true, but that's what I think. I think they go out there. Somebody, I don't know who it is, somebody in the administration knows what's going to happen next and uses DJT to put capital to work. And so when we get divergences, you know, we started thinking about this back here. We actually were very bearish on the market back in here. And what we did was we recognized that DJT went up and took out the high of April 9th well before the market did, So we just took a position in DJT. We didn't know why it looked so good versus a market that was still looking terrible. And then when it popped like this, we ended up booking our profit in DJT and rolling it into all of the other investments we'd rather own. But it's been an incredible lead indicator. So I'm going to keep watching that. And so, for instance, it's already marking a new low on the day. So I imagine the market is about to make a new low on the day. Let's see if that's true. The NASDAQ has gone right up to this black line, by the way, is the 50-day moving average. It's the 50-day moving average on the S&P and the NASDAQ. So we're running right up against critical resistance. $473.80. Let's update that. What do we have here? We're there. No need to update. 473.80. So there's the sell-off, and DJT is definitely, it was the first to new lows on the day. So here the market's making new lows on the day. Not really much to do right now. I'm not hedging anything at the moment. So it's just a sit back, relax, and wait. Trading is like, I assume trading is like war. I've never been to war, but I imagine, and you've heard this said before, that it's like, hours of boredom and then, moments of sheer terror. That's trading. There's just nothing to do for a while, and then you get the setup. I got large gamma at 550 level, which is where we're sitting right now. Nice little reversal, maybe. Let's see. Let's watch DJT. See who gets above the VWAP first. I might want to hedge off my metals risk. a little bit. And I'll use dust to do it. If GDX makes a new low on the day, I'll be hedged. I'm not doing it right now though. I'm looking at this line right in here as a stop, as a place to hedge some of my risk. I don't take all my risk off, but I might cut it in half if it takes out that level. Let's see. Nice 3-bar reversal is trying to form here, and we're looking at the 1-minute chart. This green line tends to be on a 1-minute chart. Needs to hold that green line. So it came down, tested it. If it holds, there's the 3-bar reversal. You could argue there could be a trade on now with the low of the day as the stop. That would be a carry trade position. Looks like a good setup for a trade here. If we can clear these highs right in here, I'll probably be long. Ah, there it is. Nope. It's the 1017 bar. We need 1018 to be up. That would be a good bar to buy. Reverses back down. We're out. Rallies up from here. We got a carry trade on. Kind of need to see a strong close to this. So we have this reversal pattern here that maybe you guys can see this right here. So this is the first reversal pattern of the day. We had a sell-off to a key location of 550. There's your 3-bar reversal. Now we're looking to take out the high of that level, and it's our first carry trade of the day. Could be this bar, and then the low of this bar is the stop. Not really. That wasn't the print I wanted there. So I can't, Jeff. I'm going to put more capital to work in this market. It's got to be perfect. So my carry trading is going to be limited today to only perfection, and that's not it. Converting these to 3-minute charts, I want to see how they're behaving. These are the mining stocks. Weakness off the open, we don't mind that. Still no trade here. It just hadn't set up right for me. I mean, it's right on the leg here. Maybe I should have it on. What's 1025, 1027 bar. Trump's going lower. Not sure it's going to help us there, but I think I need to close above the VWAP to make this a trade. There it goes. There it goes. Mm. Mm. Don't ever trust the first minute of a 3-minute bar, so I'm waiting to see what happens here in the second minute. It's kind of how I use the 1-minute charts. If the first minute of a 3-minute bar is a big up bar, that's always suspect to me. I'm looking for the second and third minute to be strong. If this bar is strong, then I could say, okay, I could be long the market. I mean, this for a carry trade, this is the location right in here. See, it's trying to do it. It's just not. It's not punching through, and now it's gonna. If it closes down here, then it's the reversal bar, and that's why we're not. Okay, and look at what's going on with Trump. Look at Trump. Look at Trump stock. It's the lead indicator. It's a lead indicator. I'm gonna stay out of this trade right now and see what happens. If it I'm just going to see what happens here. See that right there, that bar. Now you can see why I'm using the 1 minute chart as my execution. Okay, because the 1 minute, the first bar of a 3 minute bar, the ones that fail, the fake outs, the tails, the frustration of trading, it almost always happens on the first minute of a 3 minute bar. And this is what you're seeing right now. The first minute was a nice big blue bar. Hey, it looks like it's going. But by the end of the 3 minutes, it's reversing. And you just can't go on the first minute. That happens over and over and over again. So patience, patience, patience. I'm not putting a trade out unless I get the setup I want. I'm going to leave that out there. Unfortunately, this has the setup of a short, with DJT leading things lower and the market wedging underneath the VWAP. So it had a nice 4 white bars first thing in the morning, which, you know, if it doesn't immediately follow through is actually a bearish sign because it fails. Then it wedges underneath the VWAP for a while. And if it takes out those lows, I would almost want to be short the market. Gold is now up on the day. Silver is now flat on the day. And the mining stocks are all recovering right now. I don't know if that's, that tends to be bearish for the market, which is why it's 20% of our portfolio. So we're kind of hedged. We're not kind of hedged. We're seriously hedged. And so, you know, we've got our exposure to indexes, and it's easy to take off some of that risk, which I may do. I may do that with my TWM and QID. So I trade them during the day against my long positions at the start of this risk monitor green signal. And it doesn't have to be big exposure. It could just be taking off some of the risk, It just helps you mitigate the emotions of the situation. I don't go flat. I don't take off all my risk. I'll still lose money if the market goes down, but I'll be making money on the short, which I thoroughly intend to book that profit at some point today, expecting the market to rally back. So I haven't shorted yet, but I'm just saying this is a short setup. I almost feel like I should be doing it right now. What time is it? Yeah, it's 10:30. I think I'm going to do that. I'm going to put on that hedge right now. So I'm short the market right here. Once again, DJT is the lead indicator. Yep. DJT is leading the market. Look at that. Just look at that. Aren't you amazed? Don't you love that? DJT just kept us out of the morning long trade, so we didn't get long the carry trade. It got close. DJT was going lower, making new lows on the day as the market tried to go up. Market never got above the VWAP. We never had the right structure. 10:30, the market starts to roll over and DJT is getting hammered. I put the hedge on. Market goes above the VWAP. I'm happy to take the hedge off. I'll lose a little bit of money. I don't care. Have the whole portfolio long. But if the market craters from here, I've hedged off about half of my risk. So if it craters from here, I'm going to try to make money on that hedge while I leave the rest of the positions alone. We'll see. We'll see if it quite frankly, let's be honest, when I'm hedging, just between you and me, I hope it doesn't work. Do you follow me? I mean, I hope it goes up from here, makes a double bottom. I cover my shorts, the market skyrockets. That would be great. That's the way shorting, that's the way hedging is, though. And that's why I don't want to hedge all of my risk. The market goes up from here. I want to make sure I'm making money. It's just, I got a lot of risk out there. And I'm just going to take a little bit of that risk off the table. Just get out of the way right now for a little bit. If this double bottom holds and we take out the VWAP, I'll be covering my short and getting long for a carry trade. We avoided this. And maybe we're going to get a double bottom right here. This could be a double bottom. That'd be great. So I got my hedges on, new highs on the day, taking out that pivot high, and I take the hedge off. Between now and then, I might get long the S&P right here. Ooh, look at gold going up. Gold stocks are skyrocketing. Okay, if this closes like this will be another reversal at the key location. See right here? And we get above VWAP, and then I'll be looking to get long. Boy, the metals took off. Ooh, that looks good. Wow, surprised me. That surprises me. We got a nice reversal on Trump on a volume reversal. This is a volume reversal trigger that we use. If it follows through here, that's a good one. See, you gotta wait to the end of the bar. Rallying treasuries. As Errors points out, we got a rally in treasuries. It's a good thing. Treasuries in gold. This is the 45 bar. Before 45. 45 closes above the VWAP, and we're risk on. DJT's coming off the low. Gotta be 550 as the stop. I've nibbled away. I'm going to finish it off if it closes strong. With 550 as the stop. I'd like to see it punch through here before I do that. All right, I'm long. I don't have any hedges on, and I'm long the market right here. Trump media is running. Nice volume reversal right off the low. It's taken off. The market's trying to come off these lows. Nice double bottom. I only want to hedge when I feel like I really got to defend something. So if we take out these double bottom low, I'll put the hedge back on again. Did you ever wonder Robert Hellenstein's sci-fi novel Stranger in a Strange Land, and the term grok means to deeply understand something? That's pretty neat. I didn't know that. Eris is coming for the gas goats, huh? All right, all right, all right. So noted. No, the market's coming off. Couldn't get through the VWAP there. I think 550 is clearly the the number here. If I'm going to be long, it's 550 is the stop. All right. There is long treasuries today. Treasury bonds. That looks pretty good, Eris. That's the one index in the risk monitor that's not green yet, but a close above the 50-day moving average would flip that positive. We would close above the high of the 9th, and the algo would be positive with a close up there. So that would really kind of be bullish for the whole risk monitor green. Everybody would be in agreement. All the indexes would be in unison. I think Elbit's got a new launch. God, I can't believe I didn't make money on Elbit. Such a no-brainer. In case you didn't know, this is the defense company in Israel that, basically creates all the major defensive tools. 200 to 400 on its way to 4,000. Shame on me for not owning that. We talked about it down there, We talked about it. But talk is cheap. This is the Israeli stock market. Classic example of buying, the fear. This was the attack of October 7th, 2023. And it's just been, up and away with a couple of brief interludes. And it's breaking out again. I mean, it's leading. It's kind of leading, right? I mean, it looks like the momentum index. Hey, Aris, check your direct messages. I'm going to send you a DM. failure. Looks like I got a hedge again. Bouncing around between prices right now. Not yet. Take out these lows. We're going to have to get hedged again. We'll probably be stopped out of our carry trade. So far, it's just trading inside of a range here. Hedged again, and we're out of our carry. a bit bigger of a short on this time. Never really made it, did it? So this bar took us out right there. Which is right below where the bar that we added, below the bar we added. And it never made it. It never really made it. Probably should have taken it off sooner. It just never punched through. All right, so now we're on, now we're on sell-off watch. We've got our hedges on, bigger hedges than we had before. And we're going to see where this takes us. This is the flip trade setup. But we were getting short before we actually got stopped out on the long side. So we're already short and making back some of what we lost on that carry trade. But really the point of shorting here was to hedge our risk in the macro fund. So we're I don't know if, I guess pink's the color I usually choose for this. So we're hedged off again. And this is just in trading portfolios. It's going to be curious. I mean, some portfolios I don't hedge. I just leave the positions alone, and it is what it is. And we're going to see which portfolio performs best. It's going to be an interesting study. Back in a minute. All right. All right. All right. We're on the short side. The flip short is working as designed. Sometimes we get long, the trade fails and we go short, and that covers us. So clearly, we're covering whatever we lost on the long side this morning, and we've got ourselves hedged at a larger degree. So now the goal here on the hedge is to try to, make some money on this and uncover the long side again before the end of the day. Hedges are tricky though. It's not like a carry trade. Like the carry trade short that I've got out is a flip short, and I'm going to make sure I make money on this. I'm making money on this trade, and it's covering my long trade, right, that I had earlier. Just took a loss on the long side. Now I'm short, and I'm going to ride this down, and then I'm going to book the short gain, probably when it takes out the high of 6 minutes. It takes out the high of 2 bars ago, the trade will be over. But when it comes to hedging the whole portfolio, I probably don't do that. I'm probably going to keep the hedge on with a break-even stop the rest of the day, right? Because if this thing turns into some god-awful sell-off, well, I'm going to have a huge short on because I've hedged off more on the second trade than I did earlier in the morning. I'm not really trying to make money on the hedge. I'm just trying to make sure I mitigate losses on my long positions if this is ugly. So for the hedges, I probably am going to carry a break-even stop. For the flip trade on my carry portfolio, what do? We come into every day carrying U.S. Treasury bills, collecting interest. And then we go long or short, depending on what we see, day trade during the day, and go make sure we're in cash at the end of the day. So usually the first trade's long. We did that today. It failed. Take that stop, reverse it, get short. For the flip trade, I flip short. Market comes down. I make back some money or all of the money that I lost on the long side, and it lets me get ready for the next day. Some days you catch a ripper, some days you don't. So that trade right now, when I make money on a flip trade like this, I'm going to make sure I make money, because what I'm doing is making up for a loss this morning, and I'm getting back to, break even. Maybe I make some money on this, net. If this keeps going down, I'll make some money. We've closed the VWAP gap. That was the first location which you would look for the market to close that VWAP gap. And now I'm looking for it to come back and test this red line here. So this red line goes all the way back to the original breakdown, all those months, a couple of months ago. So we broke the downtrend, broke out, and now we're going to come down and test it. All right. Whoops. So the 11:30 update. Welcome everybody to the 11:30 update, Armor Insiders. You know that if you can't be on the desk all day, 11:30 we do an update, and then of course 3:30 we do an update. But you know, don't worry, guys. If you come in some other time, if you can't hit this time, I'll always give you an update. Just DM me and I'll explain what we're doing. So anyway, those of you who are logging in for this quick update, here are the thoughts for you. Try to carry trade this morning. It failed. We flipped short. We're making money on the flip trade to mitigate those losses on the carry this morning. We are hedging the portfolio. So for the flagship fund, I've got shorts out on the small caps and the NASDAQ 100 to hedge off the risk here as the market goes down and tests the breakout. Testing the breakout on a Monday is not a bad thing. As long as it doesn't get too out of hand, you know, there could be a nice reverse trade back up towards this location later today. So there's two different trades that I'm running. On the flip trade, I'm going to book this profit. It's, you know, you can see whatever we lost on the long side, we're making back on the short side, and we're going to take that off the table. And, you know, net, it's just a day where we're blocking and tackling, you know, keeping portfolio as close to break even as we can, and then looking for the next long trade. In our flagship fund and our macro fund, where we have all of our risk from last week, the idea was to get a hedge on in case things go south. And so I'm not going to take that short off right away. I'm probably going to use break even the rest of the day and just leave it out there. I don't know how bad this is going to be. The whole thing could reverse and implode, and I'll be, you know, maybe carrying short overnight. I don't know. So we kept about 30% of our flagship fund in cash, and we've deployed maybe not all of that cash, but because we're using 2x ETFs, but we're short, you know, 2x small caps and the NASDAQ 100 for right now to hedge off our risk. And of course, no new positions are being added to the portfolio, and we're just waiting to see where this market's going to take us. That's about it. You guys have any questions? If not, I generally take this time to take a break and go grab something to eat. There won't be a new carry. All I have on now I have on, you know, stops that I just keep rolling down. So when the market goes up, it's going to take me out, book my profit on the short side. And like I said, the hedges, I'm not taking off right now. So not a lot to do. So I'm going to step off the desk for a bit and grab a bite to eat. But because I'm managing those positions, I mean, literally, I'm going to run, grab something to eat, and bring it back to my desk. I'm going to do that in a minute. Any questions? I'm here to chat if you have them before I jump off the desk. Well, I just booked my gain on the short side of the small caps right there. Okay, so just took my gain off the table on the short side of small caps and the short side of the NASDAQ any second now. That's for the flip trade, okay, to mitigate my losses, actually erase the losses on the long side. Hasn't done it yet. About to go. I might take it off here across the board and book profits short and then see what happens, see if I have to put it out again, but I need to see the bar close here. This is a key location here, right here, which is like on the S&P. Oops, that's not what I wanted to do. I just moved that by mistake. This is 547-ish. This is a key location right here. Let's see if it can hold that level. I'm out of the Qs now. The short flip trade's done. I've made my money there. And for now, I'm all out of my hedges. I decided to book a gain on it. There's a new low of the day that's hit. I'll add those hedges back. I'm going to get out of the way of this and see what the rally looks like. If there is any rally, if I have to, I'll put it back out. Jump into lunch. Going to lunch. I'll see you in a few. I got no trades on at the moment. All right, what I miss? You guys got for me anything? Put wall 545 now. Ooh, we bounced right off of the area. So I covered my short a little bit too soon, but I decided not to re-short it here. It's just too close to this location. And Dave calls it 545, which looks pretty tasty right there. Actually, for a long trade, if we break the downtrend, this will be the breaking of the downtrend trade that we like. 12:30, not my favorite time of day for that usually, but you know, anytime it breaks a downtrend back above the black line, I get interested in getting a long trade on. So break out and come down and test this red line, which again, just to put that in perspective, the red line is this big red line right here. So I have it adjusted a little bit on the it looks a little different on this chart, doesn't it? Let's make sure I've got this correct. Comes through there, comes through there, comes through here. Seems to have been changed a little bit, huh? Okay, I see that. I see that. Okay, so it's something like that. I have it down in here coming off of these lows. And then I think this line, I just thought this line was too steep. I mean, that's certainly one downtrend to be broken. Let's go look. So one's a really steep trend, and one, to me, was a little bit smoother. Tried to break there, failed. It comes up and touches. See, it touches it right there. See, this line was a little too far away from me, and it was kind of breached a number of times. You see what I'm saying? So this second red line looks like the right line to me. That first red line comes down through here. So I don't think this is relevant here. Ooh, I like the trade coming on here. I think there's a long trade coming right here on the S&P. Ooh, let's get this opened up. Yeah, here it comes. Double bottom, right off of the key support area. Well, I mean, if the risk monitor is green, this should recover today. DJT is making a new low, though. That kind of bums me out. I want to see this thing coming back up. But I don't know if I'm over emphasizing there. I don't know. Small wiggles one way or the other is not really what I'm talking about. I'm looking for big divergences. Really good day for gold's up 1% here. Silver is coming on. Mining stocks holding up well. $12.39. What time is it? 12:38. I'd rather this thing base until 1:30, to be honest with you. Dave is telling us that the vol triggers right here at 547. If we close above that level, I think I'm getting long there, Dave. All right, there's the area that's brewing for a location trade. We've broken the downtrend. It's kind of a there's no real candle here of strength, but this is where a trade should begin. That's pretty weak, though. You really want to see a big, kind of like a nice candle right there, and you didn't get it, so nothing to do yet. So you can see it hasn't fired yet, so there's nothing to do here. We're trying to build a base, but you got to come through there on the upside for it to be anything. See what Ares is doing here. CRK, you're putting on some of your natural gas stocks again. Last entry point down here sure was a winner. It's a little wild and loose up here, but that's kind of the market we've been in. The relative strength is pretty good for that stock. EQT looks pretty good too. Oh, LNG is breaking out. I mean, chances are there's an LNG deal coming, between the U.S. and its Asian partners. And those stocks all look pretty good. LNG looks really good. When the basket of gas goats is just crushing XOP and XLE. The EQT CRK look the best along with LNG. I wonder if I deploy the 30% cash I'm talking about, maybe I should be thinking about some energy plays. We're already long AMLP, of course. 7.7% yield. I mean, if it's a yielding portfolio, then you're buying more AMLP. If you're looking for growth, you're buying those top three names. Let's go look at stocks breaking out today. Go over the O'Neill chart, see if we got anything here. What time is it? It's 1 o'clock. I'm tempted to put the trade on right there with the stop underneath that double bottom. I don't normally do that, but That looks like a good setup right there to me. You know, get on a position around 555 and of course SPXL equivalent. So I'm basically saying I'm going to buy 555. And if it takes out that level, then I exit instead of paying up for it. So it's a wicked tight stop if I put that trade out. $546. The only problem with the location trade is if you do that and it spikes down and takes you out and then reverses, you got to put the trade back on. You know, sometimes they clear out the stops and then reverse it back up. So if you put on a trade now at the location and it knifes down, you're out, and it comes back up, you double the trade. I would put on more. Whatever I do here, I would then turn around and put on more. You know, if it breaks down and goes down, nothing to do. Oh, did I write wrong? 5. Oh, yeah. Oops. Thanks for that. 545. Wait, so then what's going on here? 545.94. So 546 is what I meant. 545.94. Thank you, Kevin. Yeah, I would be in here at 546. And if it goes below 546, I would pretty much be out. So, I mean, there's the rub, right? There's two different ways. There's two different ways of trading. The way I usually like to trade is I like to see the big up bar, I get the powder keg to pop, and I get on that and it runs, and that's my trade. But not every day is that clean. And so sometimes a day like today, where it's going like this, kind of going like this, and you start to see a very clear location. Like the key location is 464 right now. No, five what the heck? 546. 546 is the clear location. And 545, goes below 545 is going to get ugly. So 546 is where the location is right now to me. It goes back below 546. I wouldn't wait for 545. I'll just, if I put a trade on at all here, I don't know. I mean, this is not normally how I trade. So normally I would say just let it base, and when it pops, we go to get on it. If it breaks down, we're not part of this. So, but yeah, I'm always tweaking. I'm always toying until I get to a strategy that I have a high, success rate at and a lot of profits to enjoy. I keep working, so I've got the carry strategy. Some markets, it makes me a lot of money. Other markets, it bleeds a little bit and I have to do flip trades. And so it's like I'm trying to figure out how if I want to execute any different than I normally do. And the thing about executing the way I normally execute, which is I need a nice pop that blows it out of the location. Well, it takes an incredible amount of patience to wait for that. It's not little wiggles. Like earlier today, we were talking just a few minutes ago. I was like, well, it might do it. It might do it. It didn't do it. Like there was nothing. We didn't put the trade on because there's nothing happening. It's a big up. It's like I say big up bar. It's a bar, a blue bar that's bigger than all the bars around it. That's the bar that tells you a trade's coming. And instead, this is just bleeding, bleeding, bleeding. So the direction remains intact. And a part of me on a day like today says, well, God, I'd love to just buy the location. And when it pops, finish the position off or do nothing. Just be happy with the size I have on. So I'm, working on that execution idea today. I think that's going to go equally weighted. A little bit weaker today. Wait, let's see what stocks are breaking out today. SAP. Makes me want to own IBM, to be honest with you. What was that? So we're going to go through some charts of the day, key charts. We're going to look at breakouts. We're going to look for 4.75% yield on Canadian natural gas transportation, electric power generation, TC Energy, Canadian. God, Schwab's been lagging behind for so long. It's incredible. Ares has ISRG on the watch. ISRG. Oh. 83 relative strength. Not bad in a difficult market for a growth stock. Something like that. Bottom of the trend. That looks pretty good. Back of the envelope type stuff. You're just buying the uptrend there. What a clear and defined channel you've got there. Well, that looks good. Recent breakout. See if anything's getting away from us. Dear, oh dear. It's too small of a stock. I don't want to, I just can't, it just doesn't trade enough volume, makes me uncomfortable. But boys, if Sprott was ever going to work, it's got to work now, right? Look at the pattern on Sprott. Look at that pattern. And gold's gone through the roof. Sprott physical gold, Sprott physical silver, Sprott physical uranium. I mean, they're right in the crosshairs of where the whole world's going. This stock should go berserk to the upside. That was the breakout, little consolidation. Man, it should just go berserk. Maybe I should get over the fact that I don't like how thin it is and just buy that pattern. And pretend it's a dividend stock at 2% yield. Oh, that's a good defense. That's a good defense right there. Comes down, shakes out below, tight little pattern, trying to pop out of here. That would be the bar, I think, that you would begin nibbling if you want to buy early, you know. That would be the bar. Takes out the low, trade over. And of course, the real, you know, the armor carry entry point is, unfortunately, it's up here. You know, market has to get up there before it would be an armor carry trade. So do I put on some right at the location and then finish it off in the green box? Maybe that's the way to go. We've avoided a lot of mistakes by not trading today. You know, we've got our first trade on there in the morning. That was a loss, flip trade, short, made money short. I guess I should have stayed short a little bit longer there. Just kind of watching here. Oh, we already looked through these. Oh, we've already looked through them all. All right. Gap, breakaway gaps today. What we got? SAP again. They got to come after, oh, Boeing. I think IBM is a buy down here, I'll be honest with you. I really do. I'm watching that for an algo entry. SAP is running here. I'm not really sure why they sold. I mean, IBM and Boeing would be a nice balance for, aggressive growth portfolio. Oops. There's an argument for waiting. Not a lot of sexy things going on in the list here of new ideas. Not a surprise the market's down today, so we're not going to see anything really sexy. I'm just kind of scrolling through. We've already looked at all these names. Bookings. How many companies can there be that are software as a service platforms used for email marketing? Like, how many companies can there possibly be that do that? Here's a new issue on another name that does that. What a crowded space. That's why I love Doximity. Do you ever come across a name that does what Doximity is doing? Cloud-based platform, medical professionals, physicians, blah, blah, blah. You just don't see it. I mean, there's just nobody. I mean, LinkedIn, but LinkedIn's not specific for what this company does. There's just no competition. That's why I have an interest down here at the 200-day moving average. Today, DJT is just following the market. It's not giving us any inside scoop. Everything's just coming in. All right, there's nothing new for us to do in here, so I'm just sitting tight. Ooh, waiting. Let's go look at our, right up into the overhead there, the 50-day moving average. You knew it was going to get, some resistance at the 50. So it's just a question of where we are by the end of the week. Pushes down back into the downtrend. This goes from ice blue back to red, and it's, new lows and risk monitor red again. Pulls back, holds here, closes strong, green's in force. I mean, it's just, we're kind of just waiting now. Back in a second. And we're breaking the downtrend again, or trying to. We're hunting a trade here. I sure would like to see DJT rally. That would be the dead giveaway. But today it's just following the market. All right. The thing is, if we have risk monitor green and it's going to be a successful green, you could sell off all morning, work through some of the overhead. What you should do is close off the lows. So that's the trade we're hunting. Can the market get up off the mat right in here, finding all of its support, and pierce the downtrend, and then rally back up towards the range? Doesn't have to be a huge up day today. Just a nice recovery day, back up into the VWAP. Maybe actually what the target for me on a trade, if I got on it here, would be that first standard deviation above the VWAP, right there. Because what we'd be doing right here is buying the first standard below the VWAP, and you look to sell the first above the VWAP. And, don't tell anybody, but I've been nibbling away down here at the location for like the last 30 minutes. Just keep that on the down low. Trying something a little bit different. So there's the theory. It's a simple theory. And if we make money on this, it's kind of something I've been thinking about for a while. And I know Chicago Dave does it. So I want to do it some more. When the risk monitor is green, I want to do it some more. When it's red, I can't do it because you can have these huge down days, right? 3 to 5%, markets crashing. So I can't go out there and try to put money to work at every location on the way down. But when the risk monitor is green, in theory, it's green. One reason for that is because volatility is compressing. So now we go back to like inside the bell curve of expectation. And Stephen usually updates us on this. You don't have to do it, Stephen. But I'm just saying, Stephen's real good at throwing out there on occasion, how many times over the last, X amount of trading sessions or over the last 52 weeks or whatever, how many times is the S&P down more than 1% on the day? The number is going to be real small unless we're on the tail part of risk monitor red risk. And so when you get down to a key location and the swing trade behind you, the groundswell is supposed to be higher, then I submit to you, I want to start making trades down at the location. I want to accumulate the location. There might be a couple that break down, reverse, go back up. I'll stop out, put the trade back on twice as much. But I want to try to do that some more when the monitor's green. Oops. All right, I had to take that phone call, but you know that we're on a trade here. We got on the trade cheap. We could finish off the trade here if you want to own more of it. Maybe you're just content to trade the size that you've got on, which I totally get. Not seeing the green box. Are we close to it? No, we're already in it. We're already in it. I had to take a phone call there, but what I was saying to you is I was building the position, Kevin. Maybe you're not. I don't know. I just put it into the Slack room there. I wrote at 1:47 p.m. I wrote, I'm trying to a location trade today, so I've been nibbling away between 5:45 and 5:46, and I want to finish it off in here. Actually, when I was talking, that I had a buy order out, so it converted it. So my position is on here in the green box, right? So and then it was finished off. So if you're looking at it, this last bar, was the definite up bar right there. But for me, my order was on in here. So it just, what's the high of that bar is where 547, 30, somewhere in there. Of course, I'm buying SPXL, so it's a little bit different. But now I got the trade on the way I want, and I have it on cheap, and I just finished it off right there. But for future reference, Kevin, I'm trying to, in a nod to Chicago Dave, and he, don't let me put words in your mouth, Dave. I don't know if you're on today, but I think you were on today. But you put these location trades on, it seems to me, I don't know for a fact, you're not posting your trades, nor do you have to, but I'm just saying, it seems to me that Dave puts on these trades down at locations. And yeah, okay, yeah, you said yes. So he puts these trades on down at locations, and I tend to like to put the trades on when we break the downtrend. And it's putting the trades on when we break the downtrend keeps me out of a lot of bad trades, because there could be more than one location that looks good, then it craters below it, then you try it again, it craters below it. So I don't like to get caught in those trades. So I guess what I'm saying is I'm still going to trade the way I normally trade, but today it came down to such an obvious location. So the location of 545, it's like there's multiple reasons why 545 should be the location that holds if the risk monitor green is going to be a winner. So I'm going to assume that the swing trade is going to kick in by the end of the day. Doesn't mean that it has to be a huge up day, but we're going to end off the lows. So that 545 setup, and let's be honest, that setup for, you don't have to look at me, you can look at the chart while I'm talking about this. It looks like it's set up from 12 to 130 to 145. I mean, it just broke out of that space at 2 o'clock. It's been a 2-hour consolidation between 546 and 545. And so right in there around 130, it tested the lows. And then this to me, I don't know if this was the bar that Chicago Dave was buying, but this to me looked like a Chicago Dave bar, which is to say he likes to jump. Again, stop me, Dave, if I'm putting words in your mouth. He writes most of the time the put wall holds. And I would submit to you, Dave, it really holds when the swing pattern is green. So when the risk monitor is green, the put wall really holds. And the only times where we see the put wall just get run and it's something ugly is when the risk monitor is red. So we could turn off this part of the strategy. Maybe, risk monitor goes red again, things are imploding. We're not going to trade locations, maybe we will, I don't know, but I'm just saying. But for this setup, it makes sense to me because I'm looking for the swing trade to continue to move higher. And so weakness all day, that's fine, that's normal. And then sometime in the afternoon, 2 o'clock is ideal. but this actually was around 130. The market put in this 4-bar reversal that I've seen Dave trade before. Down, big down bar, 2 very tight bars. And then the next bar is a nice solid up bar. You can, if I expand it a bit, you can see what I'm saying here. So there's your perfect kind of reversal. So I started nibbling right there. I said, okay, there's the reversal bar, the very first reversal bar, not waiting for it to break the downtrend. Buy it here. And then I added a little bit here, but the majority of my position was in here. And then when it pops out, just in a nod to the way I normally try, okay, I'll finish my position off there. My average price is down here. I'm not going to lose money on this trade now. And let's see if I can, make some money today. So that's what I'm trying today. We'll see if it works. But I'm really enjoying this. I've been looking at a lot of Dave's entry points, and a lot of them are put wall entry points, Dave. I mean, you've been kind enough to share your strategy and approach, and on many days it's better than what I'm doing. I don't mind telling you. So, hey, man, let's keep improving. That's why we work together. It's a trading room. That entry point's the best entry point. Now, if I'm in a rip roaring bull market, it doesn't really matter that much. I mean, it does matter, but like it kind of hides the weakness of my strategy, which is buying when it's breaking a downtrend. In a bull market, bang, that works. It works. It's great. But when you get into a more difficult market, I'm paying up too much. It reverses. I get stopped out. Then it goes again. I gotta do better. So I'm trying to focus on some location trades when I see them set up. It's not that I want to trade it constantly, but when I see it set up. And you could have said, well, we could have put it on right in here. I'll highlight this. I'll highlight this green right here, these 2 yellow bars. Yeah, absolutely. If I'm going to put the trade on, it has to be on right there. I didn't do it. And when it popped out, I said to you, this doesn't look good, so I'm not going to do it. And it came back down. But the point is, that was a trade right there. Nice double bottom over a half of an hour. I have to buy it immediately. Then it would have popped up here. I wouldn't be chasing it. It would have come back down. At that point, break even's the stop. And I start over. You see what I'm saying? So that's what I'm doing now. Yeah, I know you do, Dave. And, I think, yeah, there's a couple of. So what Dave wrote was, I love your breakout buys, but most of the time I wait for a retest or a pullback. And I got to be honest with you, when I watch what you're doing, I'm fairly certain your execution is better than mine. So I either have to buy it early with you, or when it breaks out, buy the retest or the pullback, which is what you talk about. And then look, every now and then, Dave will attest to this, every now and then it'll break out and skyrocket. So you're going to miss a trade if you're waiting for the pullback. And that drives me crazy. So then I say, okay, well, then I got to start adding real tight to the location. And then if it breaks out and skyrockets, I might have a smaller position on, but I'm still making tons of money and I bought it right. You know what I'm saying? Or it breaks out, pulls back, and I add to my position, and then it goes. So anyway, these are the things I'm working on. The retest of the vol trigger failed, so no trade. I'm not exactly sure what that means, man. I'm not sure what you meant by that. All right, I had to take that phone call. I just read that the U.S. is now beginning to fill the Strategic Petroleum Reserve again. So that ended up working out great. We sold a whole bunch right near the top, and we're buying it back cheap. Bug holding up well. CrowdStrike, Doximity, Roblox. Things are holding up well. Palantir. Tesla's on the move back a bit. Uber's up. No, this feels like a good backing and filling day so far. If we can close off of the lows, I don't know if we'll get up here, but that's the ideal target. Oh, Dave, I just read your message here in the Slack room. I see what you're saying. You were writing about what I was talking about here. So the vol trigger, it tried to go by 547 and failed, so there's no trade. That's right. We didn't make that trade, you and I. That's right. But right now, we're on a really good trade, Dave, and I got to give it a nod to the Chicago Dave entry point. That gorilla can only mean one thing. Aries has got the gorilla going, so that must mean CCJ is running. And I mean, that means we really want to get on GE Verona. I should have been on that one when I was buying the others, but shoot. I mean, I'm hoping it's going to come in a little bit and I can put that trade on. Look at GDX running. Ooh, that's impressive on gold stocks. Am I crazy to buy Boeing? Am I crazy? I've looked at a couple of turnaround stories and I sidestepped utter disaster in them. I didn't try it. I was looking at Starbucks that crashed. I was looking at Nike. That was a mess. But that's also, both of those got hit by the whole tariff thing. But those turnarounds are dead. Disney, I mean, trying to buy turnarounds is tough. We made money in Disney. This was a nice double bottom. It ran. We booked our profit in here. We didn't argue with the chart. Chart started to get lousy, so we got out. Disney's down here, looks terrible. But Boeing is just really intriguing to me because there's just been so much bad news, and the stock doesn't go down anymore. And that usually means it's going up. Oh, we got a new high on GDX right now for the day. Oh, let me take that off. I don't need to have those trades out there. I had buy stops on dust sitting out in the market a lot lower. It just took off and never came back. Oh dear. There's only one way to play uranium. Everything else is a waste of time. Just CCJ. Just load up. Load up on CCJ. Come on. Somebody go buy Sprott for me. I mean, shouldn't we own Sprott? Shouldn't we? If there's ever a time in the life of a company, they've been building this company for the market we're in right now. Is it ever going to get recognized? $45 to $55. I mean, I don't know, 40 to 55. I guess it did get recognized. Not a bad percentage move. All right, the first target's obviously got to be the VWAP. Right, Eris? Thank you. Thank you for that. These are the two Dow stocks I want. Perfectly normal. Did I ever send you the DM, Harris? What did I do? I erased it? Oh no, it's in drafts. I never sent you. All right, Harris, check your direct message. I'm sending you a message here. You heard the animals barking. That's funny, Ron. That's funny, Rhonda. The rally hounds. I love it. I don't know if they're guide dogs, or when it comes to this rally, are they guide dogs or are they balloon dogs? I don't know. All right, so we're wedging right now underneath the VWAP. And so, I'm going to be putting some out for sale right around this level, below 548. I'll be selling a bit below 548. And for those of you who are new, who may be new, what we're doing is I'm trading the S&P, but I trade triple the S&P, right? So what I'm doing is I use SPY for all my decisions, and I just execute SPXL. So I don't use stops on SPXL. The spread can change. Sometimes it doesn't trade exactly like SPY or whatever. I want the underlying asset. If it takes out this price, then I execute wherever SPXL is traded. If that gets taken out, what was it? What did I say? What did I say? 548. If 548 gets taken out, I'm selling SPXL wherever it's traded. Is it almost 3 o'clock? Boy, this has been a grind today. Yeah, Nasdaq's down 1/3%. I mean, it's a pretty reasonable day after the run we had last week. Just a consolidation up here. This is great. What would the stop be tomorrow? You know, on our swing strategy for the S&P, the stop is going to go up to here. Let's take this death cross off for now, since that's not the focus. Death crosses don't always mean the market goes lower. Oftentimes they mark the bottom. That's kind of crazy. But anyway, the stop's going to go to here now. Let's make this ice blue. That's the breaking of the downtrend we wanted. Stop goes to the low of 2 days ago, which is the low of Friday. You know, which is the low of Friday. So on our swing trade, trade number 21, you know, it was the low here, which is where we bought it, right? So break even was the stop today. Tomorrow when we wake up, the stop's going to move up to here, which means trade 21, for all intents and purposes, is going to be a profitable trade. Now, obviously, if it gaps down, it may not be. But under normal trading circumstances, it'll be a profitable trade. Either we make a little bit of money or it consolidates up here like a high type pennant and then goes again. Target 1 has been reached. Target 2 in the next hour would be a stretch, but I've seen it happen. You've seen it happen with me. In a nod to the, I'm going to move this stop up on this first partial part of the position. So we got a carry trade on cheap today. And I'm going to, the low of 2 bars ago is where my stop is going to be now. It's like 124.21-ish. Or in this the answer would be 148.56. $548.56. You got to hand it to gold. That's a pretty impressive day there on gold. I request that you hand it to gold. The blowout coming in here in Treasury bonds. It doesn't look like a blowout on that chart, but if I blow it up, it does. Look at that. That's a nice run right there. So here are some of the stocks that are in our portfolio. Palantir's higher on the day. Roblox higher on the day. Okay, I was just had to do something. So look, here are the stocks that are in our portfolio already. So let's see how they're doing versus the market. Roblox making a new high in here. Palantir, new high in here. Tesla's coming all the way back. It was down a few, 3-4% today. It's only down 0.75. Uber's at a not a new high, but up 0.75 today. Hey, look at that cybersecurity bug is up today. So not a bad showing right there. Look at silver and gold are up today. Let's go look at our carry trade. Well, this is a lovely carry trade now. Now this is starting to get to be something a little bit bigger than just a little something fun. So what are we doing here, guys? We made money short today, and now we're making money long today, and that is how we do. That's how we do. That's the carry trade. So we made money. We got a carry trade on here, lost money. We flipped short and made money. Bang, down here we covered it, booked a quick profit on it. Then the market based for a few hours, and we literally bought the bottom of the market today. And we're on a ripper. And this is, this is a lovely thing to watch. I hope it keeps melting up the rest of the day. There's a lot of time left for the market to screw it up. But if it does this today, it's just another hoof print of an emerging bull market that we're in. I know that sounds crazy because of all the noise out there, but this is how the market's supposed to behave. And during the risk monitor red for the last couple of months, it wasn't performing the way it was supposed to behave. It was performing like a bear market. And I was saying to you, there's a paw print of a bear, and it's ugly. This is a hoof print. This is a hoof print of a bull. So big week last week, sell off all morning Monday to test, find support right where you're supposed to, melt up to the close. I mean, if it melts up to the close, I don't know, it could stop right here. But if it melts up to the close, that's even more bullish. If it just closes right here, that's all that I'm expecting today. I'm expecting a close somewhere around the VWAP. Maybe tomorrow it's weak again in the morning to test. Because what you want to see in a bull market, you want to see weakness in the beginning of the week and strength at the end of the week. That's what you're looking for. So I don't mind weakness today or tomorrow. Thursday, Friday, that's a little more concerning. I'm raising a stop up. I got to sell something up here. The low of 2 bars ago is going to be my stop because we're kind of over. We're over the original target, which is just the VWAP. So we've popped above it, and so we haven't taken out the low of 2 bars ago. This whole run hasn't taken out the low of 2 bars ago. So if we take out the low of 2 bars ago, I'm booking some profit there, and I've raised my stop up to here. Do I hope that it melts up all day? Yeah, sure. I hope it gets to this yellow box. That'd be great. But at the same time, I'm not greedy on a carry trade that I got right. This was a nice fat carry trade. So the low now of 548.75 is my final exit. So I went over this with you guys on Friday. I think I was talking to Kevin Q about it, and let's go over it again right now. When we get on a great carry trade, like we are right now, let's go over what the exits are. Right now, the market's walking up. Okay, so when it hits a target, I don't like to just sell it at a target. And this is the reason why. Today is the reason why. When it hits the target and I just go sell, I'm limiting my potential upside on a screamer day. I don't know. Maybe this thing ignites and just skyrockets to the close. It's possible. I don't want to sell any just because it hit the VWAP. So when it hits the VWAP, I raise a partial stop to the low of 2 bars ago on this trade. On other trades, I guess what I'm trying to say is my first exit is always the low of 2 bars ago once a target's hit. So it hits the target and I raise the stop on a partial position to the low of 2 bars ago. This is a 3-minute chart, so I'm talking about the low of 6 minutes ago. Once that hits, I'll book my first gain, and the rest of my position has a raised stop. So I put it into the Slack room. I have low of 2 bars ago, so I'm going to keep rolling it up. And the red line you see here on the chart, on the 1-minute chart, that's the final stop. It goes below that level, done. So how did I pick that level? What I wanted to show you is I look at consolidations, and then the big blue bar that takes out the consolidation and makes a new high becomes the low that is my stop. Now, if it consolidates here and then blows out again, I'll raise my stop to the low of the bar that takes out the consolidation. And I keep doing that until I get taken out of my trade. Okay. So I'm raising the low of 2 bars ago as my stop for first stop. And then I'm going to keep raising. Now, like this is a little consolidation here. Let's say it had a big up bar. I'd raise everything to the low of that bar. I just keep pressing it higher and higher and higher until they take it away from me. But I think that some of the problems that some traders have is that you don't know how to hold on to your big winners. And let me tell you something, if you're going to be successful trading, you have to make as much money as you can when you get the trade right. You've got to ride the winner. Every now and then you have to catch that melt up, because it'll pay for a whole bunch of small, not mistakes, but small losses that you have to take. So if you get on the right trade and it starts ripping and you just arbitrarily sell it, for instance, because you hit a dollar amount that you're happy with, I don't think long term you're going to be successful doing that. Because there's going to be days where you can make 3 to 5 times, 10 times the dollar amount you're happy with. And you've got to make the money those days over a 12-month period in order for your P&L to be successful. At least trading the way I trade. Now, there's some guys out there that they take 20 cents every time they get it, and they're making, 15 trades a day, 20 trades a day. That's different. That's not what I'm talking about. If you run that strategy and you've figured out a way to be a market maker, if you're doing that, like 20 cents every time you get it, and you can make money at that, then I love you for it. Go, via con Dios, you know what I mean? I think that's great. But I'm talking about the trading that I'm doing here. 3-minute charts, 1-minute charts, what I call carry trading. I have to be on a ripper. I have to catch those ones that rip if my P&L is ever going to be successful. Now the question is, do I want to add IBM and Boeing? I got to be added, I think, if this is going to continue at this pace. That IBM just, that looks perfect to me. I mean, maybe it's just filling the gap and it rolls over again, but market's on a tear here.
Order filled. Order filled.
Okay. Again, low of 2 bars ago. This is going to be right there. 550 and a quarter. I'm going to be adding Boeing and an IBM today. I think IBM is just a gift down here. I still can't figure out why that stock sold off. Maybe it was just wicked strong. But when I looked at that earnings number, the stock should go higher. SAP is going higher. I think Boeing's going higher. So I want to buy it close to the stop down here. You're at an IBM with me. I love you. Love you for that. Give me the courage. Boy, what a screamer this trade is. I'm trading more like this, I'll be honest with you. This is just the way to do it. All right. Raising the stop again, whenever I get an outsized bar like this that really steps up. First of all, the low at 2 bars ago is my stop, so I'm going to be doing that. But I'm going to be even more aggressive. It's the low of 1 bar ago right now. That big up bar is the stop now for a portion, and a larger portion at that. That's 550 a quarter. Okay, and final is, I think, right below 550. I'm not going to be greedy here. That's enough of what I was looking for right there. So honestly, what's that low right there? Yeah, I think 540. I think I'm done on this trade. It takes out those bars right there. So that's 549.93. Those 2 red lines. And you know, this is just a question now. I mean, I'm pushing it aggressively higher right now. We're at 330. The last half hour, I've seen all kinds of crazy things happen in the last half hour, and I've made we've made a lot of money on this trade. So the last thing I want to see happen is like a huge down bar for some crazy reason. So I'm not, I'm just going to keep pushing my stops up, and I can't wait for them to take me out, be done on the trade today. I'm not going to just sell it if it keeps, walking up. I'll let them keep going. But as soon as it shows any weakness, I'm done for the day.
Order filled. Order filled.
All right, so it took me out of some on the tail there. So I'm just going to, this, we didn't sell any here. We just sold some right there at that tail, right in there. I'm going to take that off because I'm not going to sell any there. I have that as my final stop now. So end of day update. I'm working on the update. Just a minute. All right, you can go to the portfolio update page for the changes. All right, welcome to the 3:45 update this time around. Wow, what a great trading day for us. That was lots of fun. Shout out to Chicago Dave for constantly sharing his entry points. I've been working on this, watching what he's doing, and he's improving my trading. So I got to keep working on that, which is to say trading locations at the location with a quick 3-bar or 4-bar reversal, not waiting for the downtrends to break, just hitting that real fast, close to the stop. You know, I love that. It's close to my heart. I love buying things close to the stop. So doing that a little bit more often. For our carry trade today, we put a trade on this morning on this double bottom here. It failed. We flipped short. We made money short carry trading. Then we had to wait for this consolidation period and put on this trade right here at around 139. That's the 139 bar. I actually added to it on this bar here, but in retrospect, I mean, it all has to be on here. Just that's what I'll be doing in the future. There's no point in putting it. I mean, it's great that I put it on here. I made more money, but all of it should be on here. That's the entry point. It's so clear when you look at it on the chart too. You know, if this had failed, it would have just been a disastrous day, and that's the way it would have gone. But that's the right entry point closest to the stop. So I'll be doing a little more of that. And we're still on that trade. I've booked some profit in the yellow box. So we rode the whole thing up. I don't know, Kevin Q, if you're on right now, but this is another example of what we were talking about last week about how to ride your winners. If you don't ride your winners and maximize your gains when you get it right, your P&L is never going to be what you want it to be. So you might get to a level where you eyeball it and say, I've made a lot of money. That's enough for me. Raise your stop. And if it's a day where it keeps on going, you're about to make 2 or 3 days worth of gains, and it's going to pay for the lean times, and you've got to maximize that. So my favorite exit point is the low of 2 bars ago. Once I get to a first target, which was the VWAP. Once we got to the VWAP, I started watching, hey, if it takes out the low of 2 bars ago, I'll sell some. It never did it, didn't do it, didn't do it, didn't do it. Finally, in fact, it hasn't even done it yet, okay? This was a tail that took me out. But at this point, after 3:30, I raise my stop aggressively and I make sure I make money. So I don't care if they take some away from me on a tail. I let them do that. But what's amazing about this uptrend is like even at that bar, maybe it was close, but it hadn't hit my target yet. It hit the target here, the VWAP, and it's just melting up. It hasn't taken out the low of 2 bars ago. So my other message to all of you who are not day trading with us, but what does this mean? This is classic playbook type of stuff, which is bull market behavior. So you had a risk monitor green last week. Monday morning, market opens, sells off to test, finds support right at the key level, which was the put wall, reverse, rip higher to the close. That's just like music to the ears of a rodeo rider. I mean, this is that's so bull market stuff. That's the takeaway for me for the rest of my portfolio. Forget about day trading. The rest of my portfolio, I couldn't have asked for a better Monday. I hope the market's down tomorrow morning. Monday sells off, rally. Tuesday sells off, rally. And then Thursday, Friday, bang, bang, new high on the week. And you've just trapped all the shorts and all the naysayers and all the guys say it can't go up anymore. And everyone starts scrambling. You know, that's what we want. So let's hope we get it. In the meantime, what did I, you know what we did? We did in the macro fund and in the ARMR flagship fund. I told you this morning I'm going to be looking to hedge. I'm going to hedge off my risk if things get ugly this morning. And we did it. We went short for all those portfolios, small caps, NASDAQ 100, and we booked a profit in it. So we made our money short, and now the market's come right back up. And of course, we still have our long positions. I'll be hedging again tomorrow. Okay, I'll be hedging again tomorrow. If I need to. I mean, at some point in here, we won't have to hedge anymore because it'll start going like this, and we'll get far enough away from our entry point, and we'll just raise our stops and we'll ride the bull. We don't want to over trade on the hedging side. That can cost you money. But if you could find entry points like today to protect the portfolio early in the cycle this week, right? Because the first 5 days of a new risk monitor green is the most dangerous. So this is the week to go out there and hedge. If we could get past this week and we're on a strong up note, I might still hedge from time to time, but I'll be a lot more strict about it. It'll have to be an incredible setup for me to do it. Okay, like a gap up in the morning that starts to fade. Okay, I'll hedge off some risk, stuff like that. Added a couple of stocks to the portfolio today, and I had to just do it. I had to do it, and partially I'm trying to structure for the flagship fund really a balanced type of portfolio. So we have our aggressive growth risk, we have our index risk, momentum, innovative growth ETF. We have our Coinbase in there. We got our bug in there, our cybersecurity. So we've got a lot of growth risk, and we got our precious metals, which had a phenomenal day today. What a phenomenal turnaround for gold and silver after this morning's weakness. We have our Bitcoin in there, and so with the 20 to 30% cash I have left over, I might just hold some cash in a conservative portfolio. I might add some innovative growth to my aggressive portfolios, but I'm not chasing. If they're going to run away, I'm going to let them run. I might find another name here or there that I add. But for the majority of my flagship capital, a couple of Dow stocks really make sense to me. And these are the two best, I think. I got to get on Boeing. I just can't help it. It's just so much bad news out there. And the stock doesn't go lower. 2 shakeouts, closes back above the 50 and the 200-day moving averages, breaking the downtrend right here. God, any good news you'd think would put the stock to the moon. They just had China turn away 30 aircraft carriers. I mean, 30 Dreamliners or whatever. Turn it away. You'd think the stock would get crushed on that. So there's only one direction I think Boeing's going at this stage. I think it's going higher. We'll see. And then IBM. I wanted back on IBM. We didn't buy it in front of earnings, and they gapped it down for reasons that make no sense to me. So there's the double bottom on the 200-day moving average. My stop is the 200-day. I'm going to move it right up to the low of the reaction to earnings day. If it drops back down and takes it out, I'll sell it. But if it comes up from here, I want to own this. And, its closest competitor is SAP, and SAP's running away. Now, you'll see SAP was already down in front of earnings, so it gapped up on the news. And look at IBM. IBM was up into the earnings, so they sold it off in the news. It's silliness. I think this thing's going to a new high. If this is a real risk on green, I think IBM goes to a new high. And instead of buying it up here, I want to buy it down here in the base. I'm going to take that gap down as a gift. Okay. We are still on the carry trade. Knifing higher now. What a monster trade we're on. What a monster trade. And we made money short. Are you having fun yet? You having fun yet? We made money short, and now we're on a monster long trade. Woo! This is fun. Gosh, I haven't even talked about precious metals. Take a look at precious metals today. They can't get gold below the 14-day moving average. I thought for sure that thing was coming down today. Silver stocks look coiled to go. We own SILJ right in here. They look coiled to take off. Holy smokes, there they go. Look at the gold stocks. I mean, I was hoping upon hope we'd have a day like this, but I didn't think we were going to get it. This is just ideal. Okay, the stop is obviously up to this bar right now, where it's 351. I mean, I should probably just sell it, but maybe I'm going to just bang out of a little bit more here as I go, just to finish this off correctly. Okay, we're just going to get me out of a little bit here. And every big up bar between now and the end of the, or it comes down and hits that red line and I'm out of the rest. Okay, so if it's a couple more, if it's another big up bar, I'm going to sell a little more, until it reverses and I'm out. This is the NASDAQ back to the 50-day moving average. Now, I may get rejected again. I mean, it might. But that's pretty stout right there. It goes through the 50. It's going to catch a lot of people off guard. And why do we think it might go through the 50? Look at the momentum index. Momentum's already broken out above all the major moving averages. Wow. Wow. I mean, all I can say is, wow, what a great trade. We put our long position on near the low of the day. Market was down 1%. And hey, this gets back to what I was saying about Stephen, who, shares with us how often is the S&P down more than 1% in a 12-month window. Like the fat part of the bell curve, it's very rare. So the takeaway here is we put that trade on and it's ripping higher. And we put that trade on when the market was down about 1%. Now it's up about 0.25%, but we've had a huge day trading. And what it really means to me is that this is a hoof print of a bull market. Because that statistic that Stephen shares with us only works in a bull market. When you're in the tails, we had multiple days where the market was down more than 1%. But once you're done with that collapse, you go back to the normal part of the bell curve, market's down 1%. Chances are it's going to close higher. I mean, statistically, it's a ridiculously high number. I'm just selling off a little bit at a time here. It's 6 minutes to the close. I've seen some closes where there's like a big down red bar, so I'm just feeding some out as we go. And if it takes out the low at 2 bars ago, it's gone. Gary A., thank you for sharing that. Much appreciated. All right, you guys want to talk about uranium? Let's talk about it. I think my trade's over here. Let me just see. All right, maybe you want me to have some room for CCJ in here. You guys seem pretty serious. Release the hounds. I love that. What's the doji candle on the daily? I'm going to have to go look at that. How's this a doji candle? Can you post what you're looking at? You've earned that joint. Low of 2 bars ago is up here now. What time is it? I want to hold it by mistake to the close. Release the hounds. That's such a great, that's so great. Oh, that's making me chuckle. Gary A., I really appreciate the research you're sharing with me on that. And Erez is all over this CCJ. And I swore to myself, the next time Erez is buying CCJ, I would just close my eyes and do it with him. So I might have to do that. Guys, my trading day's over right there. I'm going to book that game. And I'm going to take a position in CCJ. Okay, I'm going to do CCJ with yours. Flagship fund, CCJ. For the turnaround dividend portfolio, it's not really innovative growth. I don't know where I should put that, but that's where I'll put it for now. That's just a perfect double bottom right there. As long as it doesn't turn into a head and shoulders top. We'll see when it gets up there. That's a great setup. So I got some money to work there with you. mean, the symmetry is just so beautiful. And every time in the past, I hesitate on a day like today, and then I'm chasing errors for like weeks trying to get on the right uranium trade, and I end up, losing money or making something small, and he's booking gains. So I said to myself last time, if he's getting on uranium, I'm going to get on it with him. And the only one I want, CCJ. I'm just trading CCJ. So I got CCJ, IBM, Boeing. These are different types of investments from what I've already got all over the portfolio, and I kind of like that idea, I like that feel. And honestly, as I'm thinking about maybe EQT, maybe LNG as positions for the portfolio, to get a little bit of natural gas in there as well. I've got that 20 to 30% cash, and so I might take a couple of these positions to if I can't find dividend stocks that I'm content with. I may just carry a certain amount of treasury bills as my 4.3% yield. That's my dividend. That's my income. And any other money I'm putting to work, I want growth at this stage. I don't, unless I can find something. If I can get into the tobacco stocks right, I'll do it. Verizon, I'll do. How did Verizon do today? I'll do Verizon if it holds up in here. It's going to come. It's going to catch up to AT&T. There's no doubt about it in my mind. So I'll do that. But I don't want to step. I don't like the chart there, Altria. I don't feel like paying up there for British Tobacco. So I want to buy what looks like the best possible chart pattern to buy, and that's a no-brainer. That's got to be bought. The 50-day moving average is the stop. That's reasonable. IBM, I'm buying the ridiculous selling on earnings, in my opinion, right near the 200-day. And Boeing, I gotta give it a shot. I've just been looking at it for a long time. It's been on my whiteboard forever. That's a perfect double bottom with shakeout. I love double bottoms that shake out like that and reverse. Oh, those are my favorite. It just trapped everybody. That last bit of selling was just washing out the last guy who was going to panic. And then bang, it reverses and is leading the market. Look at where Boeing is right now. It's about to make a new high. Where's the Dow? The Dow hasn't even covered the loss. I mean, it hasn't even taken out the high of 4.9. And Boeing's up here. That's serious relative strength. So, wow, guys, that was fun working with you today. So much fun when you're making it on both sides when you're day trading, short and long. That's the best. Lots of fun. Look forward to working with you guys again tomorrow. Thanks for spending your time with me. As always, you got to figure out your risk tolerance, your goal. I'm just sharing with you what I do personally, professionally. Figure out how it works for you. I shared with you a new video. I cut it, put it up in my YouTube channel for all of you to see again. It's an 11-minute video from Friday's morning meeting. And I give you the number one most important thing about making money in the stock market. The one thing. Go watch it. It's at the 7-minute, 50-second mark of the video. There's one thing you got to master if you want to make money in the market. All right. Armor Insiders, I'll see you tomorrow. 8:45, we'll get started. Thanks for spending your time today, guys. Have a good night.